Hi, everyone. Thank you very much for coming for our class today. We're doing a class taught by Nisha Blas and Sarah Rao from KeyBank on how to manage your finances in a time of crisis. This is a full slate of both clients and staff, so I hope everyone has a chance to learn something from it. I will let them take it away, but my deep gratitude to you both for coming. I really appreciate it.
Thank you, Jasmine. Thanks so much for the introduction, and we appreciate this time to be in front of everyone. My name is Nisha Blas, and I work for KeyBank right here in Colorado. I've been with KeyBank for 9 years, and I've been in financial wellness for about 20 years. Um, this is really a dream job for me, to be perfectly honest. To get to do what I love and to get to provide this knowledge to you, it's so meaningful to me. A lot of where this comes from is I wish I had had this knowledge when I was a lot younger and getting started in my career. I shudder to think how much more I'd be further along in retirement and savings. But the fortunate thing about finances is there's always redemption. You can always come back from it. So even if you've made any mistakes, even if you've gotten a slower start, or even if you haven't had the resources that you need, you can overcome and you can get better at this. And that's really the crust of how we started this series. The series is about financial wellness. That's a bit of a buzz phrase that's been around for a few years. Used to be called financial literacy, sometimes called financial education. But the crust of it is we know that when people are financially well, they're healthy in every aspect. They're healthy with their finances, healthy mentally, physically, their relationships are thriving, and that's where we want you to be. With me, I'm joined today by our banker, Sarah Rao. And Sarah, will you please introduce yourself too?
Yep, absolutely. Thank you, Nisha. So I'm Sarah Rao. I also work with KeyBank here locally in Colorado. I'm at the Ken Carroll branch. I've been at this branch for about a year now, and I've been with KeyBank for about a year and a half, but I've been in banking for 5 years. Both of my parents are actually also bankers. I never thought I would get into this myself, but I actually really like educating people on finances as well. I grew up with parents that taught me all my financial things, and I know they don't teach it to you in school. And I always thought that they should teach you like taxes and how to balance your books and, how to open a checking account, in school. And so I wanted to give that education to people as well. And the nice thing is, I, I, I like to think that your banker can be your personal banker. It doesn't have to be like you're another number at the bank. And that's what I really strive to give to all of my clients.
Thank you for that, Sarah. What an interesting background. You come from a family of bankers. That like never happens.
Right? Our family reunions are very interesting, as you can
I
imagine.
was going to say they've got to be off the chain, right? My husband and I, we both have these finance and insurance jobs, and our conversations are just as solid as yours. So that's pretty cool. There's a lot of passion and love in what we do, and I want to share a little bit more about KeyBank before we dig into this. KeyBank is a regional bank, a community bank, in fact. We are headquartered in Cleveland, Ohio. Here in Colorado, you might be surprised to know we have 58 branches. We are as far north as Fort Collins and as far south as Colorado Springs. And then we sweep out east or west, rather, to Utah, Idaho, Alaska, Oregon, Washington, have a really nice presence. Part of what makes KeyBank a community bank is our willingness to give back to our community. Some of that's through foundation work, and some of it's through philanthropy and financial wellness. So, this is a real honor to be in front of you today. As you see on the screen, today's session is called Managing Your Finances During a Crisis. A quick backstory, we started working on this presentation deck about this time last year. And obviously, we had no idea a pandemic was coming. No one knew what COVID or Corona was. But we started working on this because we were thinking of other disasters and crises. We were thinking of wildfires. We were thinking of floods and tornadoes. We were thinking of substance abuse. That's a crisis. We were thinking of lack of employment. That's a crisis. Homelessness. That's also a crisis. And we were looking at this as a way to help the community. And when the pandemic came on the scene, we quickly realized that the health is also a crisis too. So that's where this is coming from. In addition to this session, I wanted you to know that we offer many other wellness sessions. We have introductory sessions such as what does it mean to be financially well? spending and saving, which is better known as budgeting. We offer classes on saving and investing. I just taught that session earlier this morning. Understanding your credit options, home ownership. We talk about transitioning from renting or living with family to becoming a homeowner, all the way to protecting your identity and planning for healthcare costs. So stay tuned for additional sessions, and don't forget to take plenty of great notes and share this information with your friends and your family. We're family here, so if you have questions, please ask. Chances are it's something that we've heard before, and if we don't know the answer, Sarah and I will get it for you. We're going to learn together then. So just kicking us off, this sounds pretty self-explanatory, but the world truly has changed for everyone. And the reality is that most of us on some level are stressed about our financial situation. We've got the holidays that are coming on the scene. We've got this pandemic. We may have friends or family members that we're supporting, and it can be tough to really figure out how to navigate this. And this is why Sarah and I are so pleased to bring this discussion to you today. So we're going to talk about three main focuses. We're going to talk about setting your budget, saving more money, and managing debt. Someone asked me this question a few weeks ago when I presented this session about why does it matter, to be financially sound in the middle of a crisis. And the reality is a lot of us end up helping other people throughout their crisis. And it also just makes sense to have your finances in order so that when the crisis comes, you can still be able to sustain yourself, sustain your family, and sustain your community. I thought that was a really great question that someone brought up, and I just wanted to share where our heart is and why we approach it from this way. I'm going to turn it over to Sarah to talk more about setting a budget. A lot of these sites are on our KeyBank Financial Wellness page, and we're excited to share that you can access these from your home and your computer as well. Sarah?
All right, thank you, Nisha. So before I really start, my question to you guys, who has made a budget before?
The reality is most people are not really setting budgets, so there's no shame here. We're just trying to figure out where people are.
Yep, and I was going to expand on that. Who has wanted to make a budget but felt overwhelmed or didn't know where to start with the budget? So starting a budget, it doesn't have to be a big task. It sounds like a big task, but really all you need to do is even take a Word document to start. How much do you make every month? Um, where does your income come from? Do you get income from work? Do you have rental properties? Do you do side jobs? Do you do babysitting? Identify where your money is coming from so that you have a clear picture of how much you're making. And then after that, you want to look at your bills. So, do you have a mortgage? Do you have a car loan? Do you have a credit card bill? How much do you pay for your food every month? Just getting an idea, even on a Word document, is a good first step. You can always move it up to like an Excel spreadsheet and then really make it fancy, adjust things every month. Like, okay, this month I spent $250 on food instead of $300 on food. And now I can adjust and save a little bit more here and there. But just even a very bare bones thing can help you get your finances on track, because if you don't know where your money's coming from and you don't know where it's going, you have no way to know how much you can save, where you could save more. It also helps you decide where you want your money to go, because again, if you don't know where it's going in the first place, and every month you're like, my account balance is $100 and I don't know where it's all going, the budget will really help you know where those things are going.
Actually, before we go in there, I want to double click on something you talked about earlier with the budgeting, as far as how to actually calculate it, how to actually record it. One of the ways that we can do that is through our spreadsheet on the KeyBank website. Let me see if I can get this pulled up. Perfect. So this is one of the many links that's embedded in here, and this is a really great add-on to everything Sarah mentioned and more, the 50-30-20 budget. This is kind of a newer concept, and honestly, until we put this presentation together and found these resources on our wellness page, I didn't know this existed. Sarah, I know you go through this quite a bit with your clients during our financial wellness review.
Mm-hmm. Yep.
So with So with the 50-30-20 budget, you're looking at allocating about 50% of your income toward your needs. And the needs are going to be the things you're thinking of. That's going to be your housing, your transportation, your insurance, your food, childcare. 30% of your income goes toward your wants. So that's the haircut, that's dining out, it's going to the movies if we ever get back to those times. And 20% of your income goes toward your savings, investment, and retirement. That would be a dream come true. And it's a nice approach to looking at this. Within here, there's actually a hyperlink you can click on and actually type in all of your income and use this. So back to what Sarah was saying, she said that it's easy to get started on a budget. They've actually made it really easy for you here. You can just fill in your income. Let's say we make $2,000 a month. We can come down here and actually type in our needs. Housing, these are, obviously not real numbers, but I just want to show you the ease of this. So housing and insurance, those two combined equal $800, and it's letting me know how much more money we have available. And it just keeps a nice running total here and tallies all of your results at the bottom. So when we get finished with this session, we'll make sure that you have this presentation deck and that we can share this with you too. Focusing on saving more money. So now that we've talked about setting a budget and shown you kind of some of the tools for you to do that, saving is so incredibly important. It helps you with unplanned expenses, helps you to retire more comfortably if that's your goal, also helping you to pay for your children or your niece, nephew, grandchildren's education. And it helps you to prepare for those larger purchases, like a home, a car, even a vacation, in my opinion, is a larger purchase, right? So what's nice is you want to be proactive, but many of us may be thinking, I'm doing good to maintain my day-to-day expenses. How in the world can I save? The thing is, you can't afford not to save. Start small and build your way up. Most analysts, most financial advisors will ask you to keep at least 6 months worth of expenses saved in case of emergency. Well, that may not be achievable. 6 months worth of expenses for some of us can be $10 or $15,000. That's a lot of money to ask to keep liquid and available when you've got other expenses, you're helping family, you're trying to give to charities, those sorts of things. A good place to start is maybe $1,000 worth of savings and then building your way up from there. My own personal journey to savings started many years ago and it's ongoing. I started with two small savings accounts, one for the holidays and one for emergency expenses, both of which seem to kind of always come up unexpectedly. And I started saving $5 a week from my paycheck. I had it automatically go from my paycheck into the savings account. And that's how I started saving. Sarah, what was your journey like to start saving?
When I first started saving, this was actually kind of from my dad. So I was in the situation, I was 17, I was working at the grocery store, and every paycheck I would say, "Hey dad, I'm 20 bucks short for gas. Do you mind, lending me some money?" And my dad would say, "No, Sarah. Here, we're going to look at your statement and see how much you spend on all this other junk food." So after he showed me that I was spending, like $100 a month on chips and soda and all that, I decided to cut back on those things. And I didn't cut back 100%. I cut back like 25%. I think my goal was $25 every month going into savings. So um, for every month that I didn't spend that $25, I would just put that in my savings account that I'd opened up with my dad. I didn't have direct deposit, so I didn't really get that option, but um, it also kind of helped me just. It kind of ties into the budgeting as well. You don't know what you're spending unless you look at it. So
What are
I was
some
able.
areas where we may overspend, where we know we can make a small cutback, but it may make a big difference? For Sarah and I, we admit that we maybe dine out or we like to junk it up a bit. So that's an area where we can make an immediate change, not only see a difference in our health, but also we can see a difference in our finances. Sarah, I think the chat went off. Did we get any
Yep,
comments?
I see that we have somebody with dining out,
Mhm.
coffee. Anybody else?
What about online shopping? Working from home, we're on a first name basis with the FedEx, the UPS, and the Amazon drivers. So what about maybe online shopping? Are we maybe spending too much there? And does anyone feel like they spend too much money on their kiddos or on their nieces and nephews? Do you like to kind of spoil your family a bit?
And
That was
I was also going to ask too, with all the like Netflix and Hulu and all that you have out there too, like how often do you actually watch like Hulu if you have Netflix and cable and all those other things for entertainment? Those are other ways that you can cut back as well. If you have a bunch of different entertainment things and you actually haven't touched one in, a couple months, that can save you some
a
money too.
great one. That's a great idea, Sarah. I'm going through that right now where we're reassessing some of our expenses. And yesterday I had the fun pleasure of realizing that we're overspending on our car and our home insurance. I found out that our property is overinsured. We've insured the home way too much. That's number one. And number two, we had a bunch of options on our car insurance that we weren't using and didn't need. Things like roadside assistance, med pay. We already have health insurance, so we didn't necessarily need that. And also, we were being charged as high mile vehicles, even though we work from home. So we were able to get our premium down quite a bit. So that's another area. If you do have any kind of home coverages or insurance coverages, take a second look at those. That can be a big budget buster. On the screen, I just put up some more savings tips that are found on our key.com website, such as keeping your savings account separate. There's a lot of us who maybe commingle our checking account and our savings together. Definitely separate them. We're such visual people. If you see that you have $200 in your checking account, you may spend it. Maybe transfer to $100 to your savings and then spend the other 100 on miscellaneous bills. Also, this is what I chose to do: set up the automatic savings plan. Sarah, you put a lot of our clients through the automatic savings plan. Can you give any testimonies to how that's worked for you?
So in my mind, if I don't see the money in my checking account, then I don't have it. I kind of do the same thing with my direct deposit anyway with my 401k here at work. I just maximize as much as they'll match, and then I put it away and don't even think about it. And I've had a lot of clients too. We have easy up options. So every time you use your debit card, you can select like I want to have $1 every time I use it. That goes into my savings. So that way it's a little bit easier for them to save, even if they are kind of a spendaholic, because every time they're using their debit card, they're saving. And then it's kind of crazy when you have people come in after thinking like, oh, I could never afford a car or a house. And when they use the automatic savings and don't think about that extra money that's getting put away, saving about as much as they can without getting hurt in their finances, then they come back a year or two ago and then they say, well, I've got $2,000 in my savings account now. I've never been able to save even a $500 when I had it in all my checking accounts. So it really does help separating out your accounts like that. And actually, if your bank allows, and I know ours would, if you're saving up for like a vacation or something, having a separate savings for that, because you can have your savings for your emergency fund, just general family things. But then when you have a vacation account, now that's specifically for that vacation. You're not dipping into that like, oh, I need new tires. I'm going to dip into my, vacation account versus my general savings. So again, being visual people, it really does help having things in different places. Of course, if it's not free at your bank, not going to work out. But I know with us, as long as you have a checking account, all of our savings are free. So you can split them up that way.
I agree. And I have multiple savings now. I'm up to 10 now. And I know that sounds like a lot, but it's not. They all have small little amounts, but they all are designated for certain things. One of them is a health savings account for medical expenses. I wear glasses, contacts, we take a couple of maintenance medicines. I have the emergency savings, the vacation savings that Sarah mentioned, holiday savings. We also drive older cars. Our cars are about 14, 13 years old. So we have a car repair savings account for tires and oil changes. We've also got one for home repairs in case anything pops up with the electrical or the plumbing. Fortunately, we don't need a whole lot there because we have a home warranty. So that fund pretty much just covers the deductible for any kind of home expenses. But get creative and start small. I can't emphasize enough. I started with $5 a week, and that was all it took for me to really get on my journey. Before we get into the chat, two more things I wanted to talk about are play the savings game. I really love this one, the 52-week savings challenge. I'm just going to click on that one. This one is super cool. I'm super excited, so don't make fun of me. With the 52-week savings challenge, so how it works is you save $1 a day for the first week or every day. Then you save $2 a day for the second week, $3 a day for the third week, and so on and so forth. And this is about what you'll end up with if you're pretty diligent with it. That's not a bad savings for a whole year, saving almost $1,400. That can really help you achieve and meet some of your goals and dreams. And it's a creative way to find that incremental money to be able to save. Have you seen that one before, Sarah?
I have not seen this challenge before.
I like that one. Yeah, I can't wait to try it at the new year. I think the timing of this class is perfect for maybe us to get back on track and try something a little different. I think with most of our banks and credit unions through online banking, you can actually name your savings account. I would encourage you to do so. I think that's a really fun way to challenge yourself as you see your balances increase or even decrease to know where the money came from. One thing I want to remind everyone is if you need to dip into your savings for an emergency, that's what it's there for. Some people get a little bummed that their balance has decreased or that they had to use it. It's okay. It's about the discipline and it's about the behavior. The balances will come if you keep up with that discipline. Any other thoughts on that, Sarah?
No, I think that's all great. I did have one thought since we're talking about multiple accounts, and I have had this in the past. It's a little bit off topic, but it kind of goes into the fraud protection point. A lot of times when you're traveling, your debit card gets compromised. I have recommended to people, especially if there's a free checking account at your bank, have a different checking account with a different debit card for when you are traveling. You can move the vacation funds from your savings in there. That way, if that card becomes compromised, it's not your primary bank account that's compromised. It's your vacation account. Doesn't really matter. You just move the funds back into your primary account, but then you don't have to worry about, okay, well, now my electric bill is going to be late because I don't have the debit card handy that I was using to pay for it automatically. It's just, again, if your bank gives you free checking account, it doesn't hurt. And then you offer that extra layer of protection on your accounts.
I think that's a great idea. You're right. We see more compromise, and we're going to talk about fraud on the next slide, but we see more compromise when people are on vacation or they're away from home. We just let our guards down. Sarah, will you talk about how managing your debt can help us as well?
So we kind of already touched on this, but part of managing your debt is just making sure and checking every month that you're not overpaying on anything. So write down what you actually owe. Like, do I have 3 credit cards and are those interest rates crazy? Is there a way that I can either reduce that interest rate by consolidating that into a lower interest loan, or maybe doing a credit card balance transfer and having an introductory period where you maybe don't have any interest at all? Same with like your insurance. If you don't check how much you owe with them and what all that's going to, you could be overpaying. Same deal with Nisha. She didn't need roadside assistance. In my case, I have AAA, so I don't need roadside assistance either. If I go in there and I see I'm paying an extra $50 a month for that, what that's redundant. There's no reason for me to have that. Um, Kind of goes back into the budgeting as well. You don't know how much you can save and how much you're spending unless you actually go in there and take a look. Um, with managing your debt as well, one strategy, if you can't afford to do it, paying more than you can, like than the minimum on your credit card. Um, if you're paying just the minimum, a lot of the times that payment's being eaten up by your interest rate anyway, if depending on how much your balance is. So that is always a good thing to take a look at is how much are my credit cards and how much do I need to pay minimum and can I pay more than that minimum? I know when I was younger, my dad always taught me to pay myself first, and part of that is saving, and part of that is paying off your debts. I think those two things go hand in hand because if you have $100,000 in savings at 5%, like 0.05%, but then you have $100,000 in credit card debt at 18%, you're really not saving. You're actually spending more on that interest paying on your credit card. So paying on high interest debts is also a good way to save because you're saving yourself in the long run, even if your balances in your saving account don't reflect that.
A lot of us forget is it's important to have savings, but if your debt is high interest or if the payments are inappropriate, then you're really not saving the way you thought. I thought that was a great point. You
Oh,
want
I do. I have another I have a client too. I was just thinking about this. So one thing to think about as well with your debt, um, you might be like let's say you have two different car loans and one of your car loans is 3% and then one of your car loans is 5%. But your 3% car loan is, $700 and your 5% car loan is $300. But even though you might have a little bit higher interest rate on something, at the end of the day, um, if your bill is more than you can really handle, but you're at a low interest rate, it doesn't make a lot of sense to be paying, $700 on 2% when your family really needs you to be paying $400 on 5% or something like that, just so that you have a little extra wiggle room in the month. Um, I've had a client that is having a hard time wrapping her head around that because she's really insistent on having the lower interest. She's so focused on the lower interest rate and not the fact that their family household like cash flow can't support that payment. That's a conversation we've been having, and that's part of the budgeting as well. I can if you can afford to do the $700 payment at 2%, great. But if you're really struggling and you don't have any emergency savings, having a little bit higher interest rate but having a lower payment can be a good thing.
It's a great point. So when we know we're in the middle of any crisis, we can be susceptible to fraud and identity theft. Identity theft, by the way, is when someone uses your information um, without your permission. And I'm going to go over some of the ways that we see identity theft, some of the more common types of identity theft. Sarah mentioned just a moment ago that looking at your bank accounts regularly is one of the easiest ways to avoid identity theft. She also talked about a really cool tip I don't hear enough of us speak about, which is separating your accounts. If you know that you travel frequently, maybe consider a separate savings account for that or a checking account for that. If you know that maybe you're an online shopper or an online gamer, maybe have a separate checking account and debit card linked to that. Because if that account is compromised, it doesn't impact where your paycheck goes or where your main household bills are paid from. So that was a really great tip, Sarah.
Thank
Other
you.
tips are ways to shop
Um,
online, which I'm sorry.
I was going to say, of course, always having separate accounts no matter what. Anytime I have a client come in and visit me and they only have a checking account or they have a checking account with a high balance and a savings with a really low balance, my first thing to ask is why they have it that way. Because if you have a checking account, those are way more susceptible to fraud than a savings account. You've got checks out there, you've got debit cards out there, you use it for your bill payments, you use it everywhere. A savings account you really don't use anywhere else. So I usually recommend keeping most of your money in savings because really the only person who should be able to touch that is you. And if you need something, you can move it over. Um, and if you have just one account and that becomes compromised, that's a whole mess and a half because now you have no way to pay your bills unless you open up a new checking account. And that could take some time if you're working, you can't get to the bank, can't get online for whatever reason. Um, it's just good to have at least two accounts just for a safety measure. You can always have more than that as well. It doesn't hurt to check your accounts daily if you can afford to do that, if you have enough time. Check it weekly if you have time, at least once a month. Worst case, once every 2 months. I can tell you that most places, if you have fraud on your account and it's more than 60 days old, we'll still try to dispute it for you, but a lot of the companies won't give you that credit back. They'll say, hey, the person should have noticed this in their monthly statement and it's been over 60 days. They're kind of out of luck. So I have run into that where Somebody in March said, hey, around Christmas time, I had a fraudulent transaction. Can we get that back? And the other company said, yeah, no, it's been too long. They can't
Most
get that
companies
back.
do kind of have a time limit on when they will allow you to dispute a transaction. It's similar to if you make a purchase. Like if you make a purchase at Target, they tell you your receipt is good for 90 days or something like that. Think about your transactions that way too. You generally can't return something to a store years and months later, unless it's Nordstrom, but generally stay in line with that. One more thing I want to add on checking your accounts frequently is make sure that you're checking your account as often as you are using your account. Most of us use our checking accounts probably daily. We're getting gas, groceries, haircut, we're dining out, we're paying bills. That's how often you should be looking at your account. It doesn't take long for fraud to happen. The other thing I want to point out on the screen is protecting and being careful about usernames and passwords. For as creative as we are in this country, we are not creative on passwords and usernames. Sarah, what's the most common ATM PIN code?
Usually somebody's birthday, like your own birthday or somebody close to you.
That's
That's a pretty
true.
common.
So, and if anyone is close to you and they know your birthdays, your anniversaries, that could cause compromise. But also because again, we're not that creative in our own way, the most common ATM PIN code is 1234.
Oh, I didn't know that.
1234. So again, get creative and try to do something a lot better than that. So the most common online password is password. So someone said in a previous session that they make all of their passwords lyrics to their favorite song. I thought that was so cool. I love music too. So how cool is that if your password are like the shortened version of lyrics? Before we move on, most of us think about identity theft in terms of credit, and that's probably the number one way that most of us might become a victim of identity theft. But there are other ways. So if you're taking notes, there's also healthcare identity theft. So that's why when you're going to the doctor or you're going to the dentist, they ask for your ID and a copy of your insurance card to make sure that it's you receiving service and not someone else getting service in your good name. Another kind of identity theft is criminal. So let's say that I'm driving and I get pulled over for a traffic violation. I say I don't have my ID on me, but I say I'm Sarah. I give myself Sarah's name. I say Sarah's date of birth. Maybe I know her address potentially. And then when the ticket comes, I don't show up to the court. Sarah gets a bench warrant in her name. She didn't even have that traffic violation. So be careful. Always check your record. Yesterday, ironically, I just checked my motor vehicle record and I have an error on it. I have a ticket that wasn't mine. So I've actually got that escalated with Colorado Department of Motor Vehicles. Another type of identity theft is employment. So we ran into this quite a bit at the beginning of the pandemic, where people were filing unemployment benefits, rightful unemployment benefits, only to find out someone else has been working and claiming benefits in their name. So always check your credit regularly to make sure that other companies that you haven't worked for are not showing up on your credit report. In the chat, Sarah, if you don't mind typing, this is the website we go to monitor our credit. It is www.annualcreditreport.com. Annualcreditreport.com. It's the only website mandated by the government to give you your credit report for free, all three, TransUnion, Equifax, and Experian every year. It's a calendar year. So because it's December, if you haven't gotten your credit reports yet, go out and get all three of them. You cannot get your credit score for free. The credit score is proprietary. They are a for-profit company, so they'll charge you a few dollars to get your credit score. But what's most important is your report. Be looking to make sure your name is correct, the addresses, you've actually lived there, the employers that are listed, you've actually worked there, and check and make sure that all the pieces of credit on your report are accurate. Sarah, what percentage of Americans do you think have errors on their credit report?
Oh gosh, probably 60%, 60 to 70 would be my guess.
Higher.
Oh
It's
wow.
staggering. It's higher. So about 9 out of 10 Americans, roughly 80, 90% of us have something wrong on our credit. Sometimes it's mild, like, they spelled Sarah with no H. And sometimes it's all the way wrong, where that wasn't you and it's fraud. So be checking your credit report. The last two types of fraud before we move on and look at questions in the chat are tax fraud. Taxes, you'll be getting your W-2s and other earnings statements coming out in about 60 days or so. Be looking out in your mail to make sure you're getting those. People would love to intercept your mail, get your W-2, file taxes in your name, and collect your refund. And the last one is child. For those of us who have children, Sarah and I have small ones. For those of us who have children, their identity theft, their identity rather, it needs to really be protected. You can put a secure hold on your child's credit to make sure that no one can access it. So Sarah can work with you later offline about that. But those are the most common types of identity theft. Sarah, what questions do we have in the chat?
So we had Anthony, his brother took his driver's license, and so he blocked his credit. My question to you is there a good website to monitor like checking accounts and savings accounts open in your name? Because I know KeyBank doesn't report it to the um, credit bureau when somebody comes to open a checking and savings account. And while you might think like, oh, well, what does that really matter? If somebody goes and, opens a checking account and bounces a bunch of checks and then they're in the negative, $2,000, and now you can't open any other checking accounts because they did that in your name, that's a horrible position to be in. And I'm not sure of any places where you can check easily where what banks are opening accounts in your name, maybe without your knowledge.
You can. So all of us, I'm learning this myself too. All of us have access to all of our information. So KeyBank works with check systems. So check systems is a place where you can go to. Sarah, if you'll type that in, because check systems is spelled a little differently. Also telecheck. And I have seen my report on both of them. You can request your report, just like you can request your credit report. You can request your motor vehicle report. You can even request your insurance report to find out if you've ever had any losses. Everything that in your medical report too, many of us may not know, but your medical report, you could actually request a full medical report from infancy until now on any procedures, any office visits. It has it all.
Telecheck, is that spelled Tellachechek?
Telecheck is TEL, T like Tom, ELECHECK. All one word. Telecheck.
Okay.
Like telephone. Telecheck.
Gotcha.
And telecheck, you
Go
may
ahead.
even notice some merchants on the side of the cash register. They might say your check is welcome here through telecheck. Telecheck also is a system that merchants can use to verify if you write a personal check for your transaction, they can verify if that check is likely to clear or if that account is legitimate. So it protects merchants and it also protects us as consumers.
I did have one other thing to add for some new fraud that we've been seeing in the branches, if we have some time for that.
Sure.
So this one's kind of interesting. We've been running into this time of year people depositing into your account and then using a fake ID to make bigger withdrawals. So if you've been to a bank before, like Wells Fargo, I know does this for sure. If you don't actually bank there and it's not your account, they won't let you put funds in it. And you might think like, well, I'm putting money into somebody's account. What does it matter? It's not like I'm taking it, right? But if somebody does that and they have poor intentions and they've got a fake copy of your driver's license, now they know you bank there and they maybe know your bank account number. At least they have the last four on the receipt. But then they can go and maybe make a fake check and then start taking money out of that, or just showing the fake ID that they have. But that's kind of the reason why banks might not let you deposit into somebody else's account. It's because they don't want you to know that that person has an account there. And we have been seeing a lot more of that. Fraudsters have gotten kind of wise now. They've been putting like $20 in the checking account, and then they say, okay, now I know this person banks here, coming with a fake ID, and then taking out 2,000. So keep an eye on any any deposits into your account, especially if it's at like a branch that you're not familiar with, just because you could be getting cased by somebody who's trying to take money out of your account.
Wow, Sarah, I remember hearing about that when I was a teller a while ago, and I'm surprised that one's come back. The other reason, when I was a teller back then, I worked at a bigger bank, and we weren't allowed to accept deposits from someone who wasn't the account holder. And one of the reasons why is because we knew that there were situations where people were putting in bad checks into someone's account. I ran into a situation with that once where we had a customer, her husband was supposed, her ex-husband was supposed to pay child support or maintenance. He would deposit a bad check into her account, totally causing her account to overdraw and for her to get fees. And so that's another reason that we stopped that, is because we wanted to really protect the client and protect ourselves. But fraud is real. We're, fear, we're not into fear, we're just into the facts that it happens, and it happens to more people than we know. Identity theft is the fastest growing crime in America, and it has been for at least 20 years. And the only way to stop it is to check your accounts, know your options, have a personal banker like Sarah who can help offer you that guidance, and make sure that you are staying up on the trends, because it's ever changing. Now, what to do if you're having financial difficulties? The biggest thing I'll say, and I'm going to turn this over to Sarah because this is really her field of expertise, is to over communicate. Right now, there has never been so much grace. Everyone wants you to stay in your home. Everyone wants you to keep your car. No one wants anything back that you've already gotten, but we want to hear from you if it's tough for you to make those payments. Sarah, you have a great relationship with your bank, your banker. Do you have your banker? Do you have your banker's phone number? Just a toll-free number?
The culture in banking has been to treat people like they're just a number. You come in, you ask for the checking account. They don't really get to know you or care to know you. They just put you in a checking account. Maybe it's not even the right kind for you. Maybe it has fees and they didn't tell you. Um, what my goal is, and I just want to share this with everybody, and I know my team here in Ken Carroll branch, and I know most of the teams in the area. We really do want to get to know you, and we want to be your personal banker. We want to make sure we're putting you in the right kind of account, which is why if we ask you a lot of questions, it's not because we're just trying to be, prying into your personal life. We do truly want to get to know you, where your challenges are, and what's going to be the best fit. Because at the end of the day, we're I don't like getting fees. I don't get like a bonus if I give you a fee or anything like that. It's my job to make sure you're happy with your banker and to provide you guidance. And I don't think that's possible if I don't get to know you and I put you in the wrong kind of account. So I guess the first place you start, even if you don't have a relationship with your banker yet, feel free to reach out to them. They're just people too. They they're that's their job. If they don't want to listen to you, then you should probably check another bank until you find somebody who seems legitimate in caring about your situation and wanting to help.
Bankers are financial professionals, and we're trained and certified to offer this kind of advice. We go through our own processes and we have our own compliance. Think about it in terms of this. If you went to the doctor, you'd have no issues filling out an intake form with a complete medical history, any medications you take, any past visits, the reason why you're here. Think about your banker in that term. Be as transparent with your banker as we should be with our doctor. And I say, we know that these are difficult times, and you may still have some questions that you may not want to address in the chat, or you may have not felt comfortable addressing in this forum. That's okay. I really want to thank everyone and applaud you for joining us today. Conversations like these lead to success, really opening that door to make sure you have the resources and the tools you need. So on the screen, there's some hyperlinks that'll be built into the deck that we'll send to you later that will help you figure out if you're on track financially, what to do if you can't pay your bills, how to set up emergency savings, those sorts of things. Other resources before we wrap it up and answer any questions. 211 Colorado. I'm a huge fan of this resource. You can get everything here, anything from childcare. if you have food shortages, if you need utilities paid, if you need housing, even if you need just someone to talk to, maybe some counseling, someone there, they really do it all. They're kind of like tofu. They take on the flavor of whatever you need. They become chicken, beef, fish, whatever you need. So in 211 Colorado, you'll see all the different categories and resources that they offer. Check out this COVID-19 resource section. I'm so pleasantly pleased with the work that they're doing in our community. Also, another resource I wanted to draw your attention to is the Federal Trade Commission. Most people may not know this, but the FTC, Federal Trade Commission, they are like a consumer watchdog group. They're looking out for fraud. They're looking out for scams. Right at the beginning of the pandemic, when all these companies were coming out saying they had the cure for COVID, or send me $5 and we'll send you a pill that'll keep you COVID free, they were going after those companies. They go after any company that is targeting consumers erroneously, taking our good hard-earned money. And they've got really great tips on here about identity theft, getting your credit report. They're going to tell you to go to annual credit report, all the consumer alerts, all the free resources, how to file complaints. Again, these groups are working for us. And the last group I wanted to draw your attention to would be the State of Colorado COVID funding resources. Once that gets pulled up. So this is through Help Colorado Now, which are more funding sources. Some of it's drilled down based on county, some of it's drilled down based on your business needs, but other great resources. In addition to the great work we do, obviously, here at Bay Out. So a lot of great opportunities for us to really get the tools that we need. I also wanted to put Sarah's information on the screen as we wrap it up and answer any questions, but you guys have been great. I appreciate your comments. I hope this was a great way for us to kind of start this part of the financial wellness journey. There's no shame in any of this. It's really turning the mirror on ourselves and figuring out what works and what doesn't work. But what does work for us is having these kind of conversations, opening that door. Sarah?
I just wanted to thank all of you guys for your time, and I'd be very happy to, even if I'm not your banker yet, even if I'm too far away branch-wise, my job is to give you guys education. I help a lot of clients who, actually go to other branches in person, but they still ask me questions. I'm always happy to answer. As long I even if I don't get back to you straight away, I usually try to get back within 24 hours. And even if that is like, hey, I've got a really swamped schedule right now with, key at work presentations, with all these other appointments that I have, but let me find that answer for you. If there's any way I can help, I'm always happy to help.
This is an area where Sarah has really helped just tons of clients with this one, is figuring out where your money is going and where it maybe could go to better fit your goals and your needs. On this spreadsheet too, you'll notice we actually spell out what a need is. We spell out what a want is. So we give you a lot of tips and tools, even digitally here. So backing this up with Sarah's assistance, I think is really powerful.
The financial wellness review is a digital way of doing that. It really helps make sure that the banker touches on all the points. So we're going to dig into how you like to do your banking. Like, do you do it online or do you do it in paper? Where do you have all of your accounts? Where do you have your retirement? Have you started saving for retirement? Where do you have your savings if you have a savings? What are all your loans and your credit cards? And then what are the interest rates on those? And how can we help you save on those pieces? And again, the guide is great because it's just our way to really make sure that you're asking, like we ask you all the questions you might not know to ask yourself. Really get in there and ask some hard questions that maybe you don't want to ask yourself. And then we give you some recommendations at the end, which you can go with KeyBank, or you can take to your own bank and say, hey, do you have something comparable to this? But it doesn't cost anything.
Writing a will. That's something I think often our clientele, even our staff, don't get around to doing. And so I'm looking into getting a class set up on that, how to write a will, why it's important, and some resources around doing that. So stay tuned. And the second thing that I wanted to mention was for both the staff and the clientele on here, a lot of times we'll run into our participants that receive benefits, disability benefits, Social Security income. And when they start working, they tend to see overpayments. And so really good things that were said here today were to kind of set some stuff aside just in case you have a big overpayment of your disability benefits. Make a different savings account was a really, really great suggestion. But I can't encourage everyone enough to consider saving some of your disability benefits, especially if you start to work, so that you don't have a gigantic overpayment once Social Security gets back around to you, which could take a year to 2 years to sometimes 3 to 5 years. You really just never know. And that could be in the thousands of dollars that you owe back to the government. So I just wanted to shoot that out there too for everyone.
They can put you up on a payment plan. You can ask them to remove some of the late pays. You have a lot of flexibility. You have the upper hand in a really positive way. They can't take back anything you purchase. This is not like a car that can be repossessed or a home that can be foreclosed on. So while this is a tough situation, you have the upper hand, but they need to hear from you. So if you want us to help you formulate that conversation so you can get that part going, I'd love to help you with that. That's kind of one of my specialties.
Nisha, that was powerful.
Yes.
I truly believe it. I think if anything pops into your head that's legal and reasonable, then it's there for a reason. I'm like, let me put some parameters around that.
Right.
Because if your dream is to rob 5 liquor stores, and that's probably not a good dream. If your dream is to be a homeowner and give your babies the space that they want and need, then you got to do it, and you can do it. I have the unique perspective because I was an underwriter before I was a banker. So I know how to make my clients look credit attractive. Like, think of it as glamour shots for your credit. I know how to make the loan look exactly the way it needs to so you can get approved. Sarah is amazing at making sure that you even get to the point where you can get a loan. So between the two of us, we can make sure that you get what you need.